The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello. Nice to be here with you on a Thursday afternoon. I'm Nadine Blaney.
I'm Juliette Sarli on a day when we are eyeing records on the market, and we saw Wall Street, all three indices hitting a record.
Yeah, I woke up too early, grabbed my phone and went, oh, it's going to be one of those days. Let's get ready for it. So as the curtains come down on the COB Australia index, up by a very solid 1.7%. And when we take a look at, we know that the last of the day's trades are coming through. I feel like I say that every day, but we've got the XJO, the good old S&P ASX 200 at 7,889.2, up 1.75%.
Yeah, and I think obviously that can be attributed to what we saw overnight with the US CPI, but also that unemployment rate here at 4.1%. Does that just add to the fact that we too will see rate cuts before 2024 is out? Let's have a look at what our three themes of the day are as we see the ASX on fire and these jobs down, rate kept but up. Now, I just spoke to Bjorn Jarvis from the ABS, and I also spoke to Paul Brennan from Suncorp about the jobs data. It really is this high migration picture and the fact that a lot of people that were out of the workforce coming back in, maybe they had summer break, but we've got to remember the Easter seasonal factor too. Yeah,
there is a little bit of noise in the numbers as always. But yeah, I was reading a note just being put out by the team at Deutsche Bank here in Australia saying that it sort of solidified their view for, November interest rate cut. And that seems to be what I'm getting so far. Now, Fed speak, that becomes even more important today. Now, I had it. It was Bostic. It was Mester. Who else? There's another one. It was...
Bostic loves a chat, doesn't he?
They all love a chat, to be honest. Anyways, Bostic, Mester,
and Bar.
And Bar.
Yeah, and
this is, Barkin. This is, four. Bar, Barkin, Mester, and Bostic.
There we go.
Got it.
Sounds like a band.
But the thing is, it becomes even more important to hear from these guys because we want to get any sort of nuance as to how the inflation reads, because it was producer prices and the consumer price index, how it might be shaping up or how it might be changing the color of their thoughts around rate cuts.
Yeah, and wake me up when September comes, as they say, because a lot of our guests saying September could be when you see that Fed rate cut. All right, let's have a quick look at some of the sectors that we were following on the market today. Of course, REITs very much in focus on these interest rate cut bets. Charter Hall there.
Yeah, also a little bit of sort of afterglow from the budget, I'd say, for these guys as well, because, there was a lot of spending being put out there for housing. Don't forget, we still are digesting the budget. Many people I've been speaking to. In fact, I had a chance to speak with Sky Masters from the NAB today. Look, it mildly inflationary, technically cutting inflation with some of that tinkering around the edges when it comes to that energy rebate, but inflationary. Anyways, I digress. Let's not distract from the really good news in the tech space here. The Nasdaq and the tech did lead U.S. markets higher as well.
Yeah, and I think a broker upgrade for Xero as well from Citi, if I'm not wrong. Energy stocks, just having a great chat about commodities with Attila Widnell in Singapore. Good. He's fabulous. Such a great sense of humour as well. Boss Energy down 1.2%, and elsewhere, what else have we got? We've got crude oil prices holding, I think, around $82.75 a barrel.
Yeah, we did see some pretty strong price action in terms of copper through the overnight period as well, hitting a record high. But in terms of corporate specifics, the ACCC intervening in a bidding war between France's Louis Dreyfus and Singapore's Olam over Nimoy. That's how we say it, Nimoy cotton.
Yeah, not Naomi. Down 4.7%. Incitec Pivot saying it might sell off its fertilisers business to an Indonesian company. Shares up 5%. Also reaffirmed its guidance, I believe.
Yeah, and GrainCorp, well, we knew this was well flagged to the market just last week, attributing poor weather for a fall in its net profit and sales over the 6 months to March.
And then we also had Aristocrat, a very, very positive session there, up 12.5%, lifting its profit, upping its dividend by 20% for the 6 months to March. So surprise, surprise, people are still gambling.
Yeah, well, and it was the stock of the day, surprise, surprise. We spoke with Conrad Song from Macro Capital and Howard Coleman from Team Invest. Here's their take.
Aristocrat hasn't really been a company we've been in and out of too much. It's just been sort of something to monitor. If you're in it, like I said, we'd probably just put a hold on it. We don't necessarily have too much of a conviction behind, like I said, those, whether it's even economic or just more importantly the legal ramifications of Dragon Link and Light and Wonders. But yeah, so for us it's just a hold.
If gambling doesn't bother you, then why sell it? And in fact, the interesting thing is it may even be immune to a downturn in the economy, because historically, if you go all the way back to Great Depression and earlier, gambling has done very well when times have been tough. In fact, gambling has boomed whenever there's been a recession.
Yeah.
So it may even do well then, but I don't hold it, and none of our funds in the group hold it for the reasons that it's a gambling stock.
Why change, Howard? That was Howard Coleman from Team Invest and Conrad Song from Macro. But I think importantly with Aristocrat, it'll be interesting to see what the brokers come out with tonight, because we do have Light and Wonder that's, you know, punching above its weight, some say, when it comes to that sector as well. It reported last week. So yeah, interesting to see how these things all add up in the end.
Indeed. All right, let's welcome our guest to the COB, Zoran Kresovic from 8Cap. Good to see you, Zoran. Thanks so much for joining us. I guess your overall take on the market, which is getting towards these records.
Yes, it's been a pretty incredible day, to be honest, today. Obviously, bullish sentiment prevailing heavily, and we are just a touch off, I think, 0.34% of an all-time high, which is really, really significant on the back of, obviously, a number of fundamentals. CPI data from the US last night boosting and providing a risk-on sentiment, flowing through the S&P 500, NASDAQ, and obviously we catching on to that wave of bullishness today as well. So it's we closed at approximately 1.67%, predominantly driven obviously by interest rate sensitive sectors and gold, materials, and property stocks as well.
Yes, well, you did say last week when we spoke, Zoran, that we could see the ASX rise from here. Technically speaking, yeah, I mean, if we're talking about all-time highs, I mean, we're calling this a post-CPI party, but what still needs to go right to keep this market pushing higher?
So I think there's a number of factors that we actually need to consider here in order to see ASX in particular actually reach all-time high, and not only that, but actually exceed that. Because if you do a slight comparison in terms of the S&P, NASDAQ, even DAX and FTSE, all those markets have actually tremendously gone through over the last few months and gained quite a significant amount, and also reaching all-time highs on weekly basis. It's not the case here in Australia. I think the narrative behind that is predominantly driven by the fact that we've got this narrative, or that's actually been somewhat changed earlier in the week, but from RBA that rates are to stay higher for longer, and in fact actually market repricing itself recently with a potential of 25 basis point interest rate hike. Now we've seen earlier in the week, and in terms of, and from RBA last week as well, that's unlikely to be the case. As long as we can actually tame the labor market, because that's the one that's been actually predominantly heating up. It looks like the unemployment is obviously coming up or going up slightly, or at least jobless claims that came out earlier today indicate that. Then perhaps maybe we will see a potential interest rate cut later in the year, because we can see that prior to this meeting this morning, in terms of the unemployment data, that market was actually pricing in only around 25 to 30% chance of interest rate hike by the month of December 2024. But it seems to be a different story post the actual announcement and data 11:30 today, where market is repricing itself now with a potential 50% interest rate cut.
Yeah, well, I wanted to ask you about that data, the 4.1% unemployment rate. Zoran, the moves that you're seeing in the Aussie.
Yeah, so I mean, it's a bit of a mixed bag, to be honest. We got to dig into a little bit deeper to actually see what's actually unfolding. So we can see that full-time employment is actually gone down. We can see the part-time employment is actually gone up, and the participation rate is actually gone up from 66.6 to 66.7% from prior month. Now, in terms of the actual unemployment itself, what we can see in terms of the April data comparison to March, similar story to what we saw in January as well. The unemployment component, or around 7.1% increase, predominantly is coming through because of the seasonality aspect that's actually driving this, because what we're seeing right now is actually a lot of people during the Easter holidays are actually changing jobs. So there is actually quite a large amount of people right now sitting on the sidelines who are actually employed or getting employed by actually they starting to get back into the market. So that's the key takeaway that I'm actually seeing from here. Another point that I would like to make here, and something to consider, is for next week. We've obviously got the retail sales, given the fact that, we've got fairly robust, discretionary sector, and in terms of the actual spending in general, we need to actually have a look at that closely to see whether that consumer sentiment is actually coming off a little bit, which is probably provide that RBA more significance, towards actually, having the inflation going down towards the 2 to 3% band, which is what they're hoping for.
Okay, so that obviously will dictate what happens with the Aussie, as does, of course, US dollar action, which brings me to, the States tonight after that record-breaking close on Wall Street. Is it time to pause for a breather, or do you think that some of the rhetoric coming from those central bankers there might, help to keep this bull market intact?
My general view is actually that we are likely to see U.S. equities continue to actually go up higher, predominantly on the basis that obviously we are seeing discounted price, or actually dovishness in US dollar. And we can actually see that from, if you have a look at the US dollar versus the index, we can actually see US dollar depreciating quite significantly over the past few weeks. I think the CPI data that came out last night, coming lower than what market was anticipating, specifically focusing on the core numbers, is actually providing a bit of clarity or better sentiment and risk on rally within the global equities and S&P and NASDAQ, with obviously the lead from tech sector in general. We've got the Fed speakers tonight, which obviously they can be a little bit subjective, to be honest, because, each one of them has got its own view. But I think we are actually so heavily skewed towards being data dependent, that we will be watching closely that, data that comes out later tonight in terms of the jobless numbers, to actually see where we're heading towards with regards to the US economy.
All right, Zoran, thank you so much. Just thinking about Attila that I just spoke to, but of course, Zoran, we appreciate all your thoughts. Zoran Kresovic from 8Cap with us there. Let's have a quick look. The market has closed. At the after close leaders there, Aristocrat we mentioned, doing very well. Chalice Mining always seems to be on the board, and Xero up 5%.
Yeah, there were some of those companies that did fall to the downside. Tough to be a holder of one of these stocks on such a positive day. But we do have IDP Education, a bit of give back from yesterday, down by 4.5%. Arcadium Lithium, I was reading a broker note about this one earlier today, off by 4.4%. Kelsian, Sandfire, and Beach Energy. In the small to mid-cap space, Juliette?
Yeah, Vinyl, the Tinder of the music industry, up 16%. OneView Healthcare, Legacy Iron Ore, Patriot Battery Metals up 10%, and Catalyst Metals. So a lot of the small metals players, I guess, on the back of the budget still.
Let's flip the page, see what's facing us here. Next, Science, KNS, and Cocol. All right, moving on from that. Zoran brought up a good point. Not only do we have these FOMC speakers, but we do have the weekly jobless claims report, which, the market does take notice of. Industrial production, we've got housing starts, U.S. import and export prices. We've also got the Philly Fed index coming through, which will give us some sort of an indication about the economic pulse in the United States. And we have Walmart.
Yeah, Walmart, some big sort of earnings in terms of, I guess, some of the retailers, because you've also got Baidu, which is the big Chinese company, and JD.com as well, of course, both listed in the US, John Deere as well. So really interesting. And Under Armour, a really interesting read that you'll get on the overall retail picture in the US. But coming back to our region tomorrow, big day on China data. We're going to be speaking to Gary Ng from Natixis. It'll probably be just before the data is released, normally around 12 or 1 o'clock our time. We'll speak to him at 11:50, but really interesting to just get this sense of what is happening, particularly amongst this news that China is trying to buy up some of the unsold homes to support the property sector. PPI too from New Zealand.
Yeah, we've got some earnings coming through, Serco I think that is, and of course we'll be digesting the week. You know, we'll be questioning whether or not our interest rate expectations have really changed significantly.
You're going to say we'll be questioning our sanity after a very big week.
Well, but that interview with Paul Brennan, Suncorp chief economist, is up online if you'd like to take a listen and just hear, you know, some of these economists, these market watchers really fleshing out what needs to go right now, between now and, you know, say November, to see this cut come through. You know, it's often quite icky. You know, you're seeing the unemployment rate rise. That means more people are without a job, but that is in fact what is trying to be, you know, brought to the fore. And of course, that's exactly what the government does not want.
Yeah, and I did also want to note, because we've been so busy with the budget, we've had, you know, back-to-back interviews. It's a lot of stuff that's on our website if you've missed it, but including the SIAA conference. And you and I have both had a couple of conversations that haven't made it to air, but are on our website. Is going to have certain. I had a fascinating conversation with Nicholas Davis from UTS about AI, market regulation, how we should be leaning into that, not being fearful. That's going to be up on the website too. And you spoke to Platypus as well.
Yeah, I did. And again, AI theme crept into that conversation, but just to get an idea of where they're thinking about in terms of market performance for the remainder of 2024. So yeah, our website, ausbiz.com.au, you might be watching us on it, or you might be listening to this in podcast form, is really, you know, absolutely full of opportunities and insights from really smart market participants.
Indeed. A quick look at where the market has closed, very much near those records as we mentioned.
Boy.
1.7% on the CBO 200, the ASX 200, 7,889, up 1.8%.
Yeah, okay, so look, really positive session. We'll see what's in store in the United States tonight. I dare say we'll hear more about the US hiking those Chinese tariffs as well. That's a big story, big thematic. And of course, elections loom large in the States. I think it's about time we get the United States Study Center or somebody back on just to start talking about it. I read a really interesting note from RBC Capital Markets about, you know, what the upcoming election will also mean for energy policy. I mean, that has its, you know, reverberates all across markets. So lots happening. We'll get across it all again tomorrow.
See you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
I'm still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.